Good morning, traders, and welcome to BCI's morning market outlook. Let's take a quick look at the latest movements across key markets and the factors shaping them. First up, let's talk a bit about the US dollar. The DXY saw a slight increase last week, but is currently still trading below the 98 level. Persistent price pressures highlight the Federal Reserve's challenge in balancing rate cuts with a weak job market. The core PCE price index rose 0.3% in July, bringing its annual growth to 2.9%, which is the fastest since February. Meanwhile, consumer spending showed its strongest increase in 4 months. Comments from Federal Reserve Governor Fowler indicated support for a potential rate cut in September, with further easing possible over the next 3 to 6 months if employment remains weak and inflation is stable. Despite recent gains, the dollar is still heading towards the decline seen in August as markets price in expectations for easing at the upcoming September meeting. From a technical perspective, the US dollar index remains within a descending channel pattern, suggesting a persistent bearish bias. The 14-day RSI index or relative strength index or RSI is below 50, reflecting bearish sentiment, and short-term momentum is weakening as the index trades below its 89-day simple moving average. Immediate resistance is seen at the 34 and 89-day moving averages, while key support levels remain near last week's low and previous multi-week lows. Next up, let's have a look at WTI crude oil, which moved within a narrow range last week, trading between 62.80 and 64.95. Prices were influenced by concerns about oversupply and US pressure on India to halt Russian oil imports. In addition, tensions between Russia and Ukraine still remain a factor, with missile and drone attacks targeting refineries. US EIA data showed a larger than expected draw in crude inventories, suggesting continued strong demand from the world's largest oil consumer. Technically, WTI crude has faced resistance near $65 and the 50% Fibonacci retracement level. Momentum indicators like the 14-day RSI are currently neutral, reflecting a lack of clear directional strength. Price action around key moving averages and support levels will likely guide short-term market sentiment. Next up, let's have a look at gold, which reached a 1 month high last week, breaking through $3,400 per ounce and hitting $3,454. The rally is supported by a weaker dollar and safe haven demand amid uncertainty over US monetary policy. Comments from Federal Reserve officials, including Governor Vola and New York Fed President John Williams, have reinforced expectations of a possible rate cut, which has added support for the precious metal. From a technical standpoint, gold's breakout above $3,400 has opened upside potential. The 14-day RSI is approaching overbought territory, but support remains intact around $3,400 and key moving averages. Market participants will be watching how gold reacts around its recent highs for further clues. Lastly, let's have a look at the Australian dollar, which rose to approximately 65.48 before the weekend, hitting a 2-week high and marking 4 consecutive days of gains. The pair has been supported by expectations of US rate cuts and stronger than expected domestic inflation data, which tempered bets on a near-term RBA rate cut. Market participants are also awaiting the upcoming manufacturing PMI for insights into the Australian economic momentum. Technically, the Australian dollar is trading above its 20-day moving average, with the 14-day RSI indicating upward momentum. Key resistance levels include recent monthly and multi-month highs, while support is seen around the rising trend line and key moving averages. Well, that wraps up today's morning market outlook. Stay tuned to developments in the US dollar, crude oil, gold, and the Australian dollar as traders digest economic data and central bank commentary. As always, manage your risk and happy trading.